Welcome back, dear traders. Tonight, traders will get to know the long-awaited Fed's decision on the official funds rate and liquidity tapering. It means that the central bank will put an end to uncertainty and send clear-cut signals of further policy moves. Let's try to figure out what to expect from popular trading instruments, at least today. The US stock market is trading on an optimistic note in anticipation of the Fed's decisions. Major stock indexes closed in the green yesterday. The Dow Jones and the Nasdaq edged up 0.2% each. The S&P 500 climbed 0.5% to close at 4,190 points. The key indexes are trading with the cautious gains in the New York pre-market today. The S&P is expected to trade in the corridor between 4,140 and 4,210. Yesterday, investors welcomed decent financial reports by pharmaceutical companies. Pfizer reported that the profit per share came in at $1.62, stronger than the expected $1.49. Its revenue was $25.66 billion in the first quarter versus $24.1 billion in the forecast. Securities of blue water vaccines logged an explosive growth of 93.11%. And today, Wall Street investors are focused on the Fed's verdict and the chairman's press conference. The response on Wall Street will depend on the rhetoric of the Fed's leader. One of the options is that the stock market might grow if Jerome Powell comes up with a dovish and cautious comments. Wall Street developed a brief rally in response to the Fed's meeting in March. The stock market rose 8% in just 2 weeks. Investors prefer clarity. So the equity market is at a crossroads before the Fed's decisions. Meanwhile, the US dollar is flexing its muscles. Its index settles close to the highest level in 20 years. And today it has a good chance to extend confident growth. The expected corridor for today is between 103 and 104 points. The US dollar is going to celebrate its triumph. The market has already priced in a rate hike of 50 basis points. Investors want to check if the US Fed is going to proceed with the drastic measures against soaring inflation. Notably, the employment data released today could be a cause for concern. The ADP payrolls processor published its monthly survey. The ADP National Employment Report prefaces the government data, and the US private sector added 247,000 jobs in April, the lowest figure for the last 2 years and way weaker than the expected increase of 395,000 jobs. The number of new jobs fell by 232,000 from the revised 479,000 in March. It might indicate a serious slowdown in hiring. The US labor market has been defined as healthy, while demand for labor force remains strong. The shortage in the labor force has led to a modest increase in jobs at manufacturing companies and service providers. Traders are also discouraged by the US trade balance. The trade deficit expanded by 22.3% in March to a record $109.8 billion. Imports surged by 10.3% to $351.5 billion, the highest value in the history of such surveys. Exports also climbed to a historic record of $241.7 billion. Though exports grew just by 5.6%. Analysts say that the US dollar might make a serious correction on the condition that the Federal Reserve will reveal a sharp shift towards the dovish rhetoric away from the hawkish one. The European Commission has already rocked the market. The new tranche of sanctions sets out a step-by-step oil embargo. This package is going to be the toughest ever for Russia. Though the sanctions have not been signed into law yet, oil prices are heading for new highs. The benchmark oil grades have added a 3.5% intraday. Brent has appreciated to $109 a barrel and WTI has climbed to $106.5. The final decision on the sanctions will be announced at the end of the week. However, the ongoing rally could provide the loonie with its support. Meanwhile, the crypto market is trading with a moderate optimism. Bitcoin is trading at about $38,954, having added 640 points overnight. The outlook for the flagship crypto depends on the Fed's policy announcement. The recent dynamic in the crypto market means that Bitcoin is still not viewed as a good alternative investment in turbulent times. At the same time, technical patterns signal a probable reversal upwards in the short term. The realistic scenario suggests a decline to 37,400 first and then towards $32,000 or $30,000. The intraday corridor is seen between $37,400 and $39,600 per token. To sum up, this trading week is going to be highly volatile. Market sentiment will depend on the crucial event, the outcome of the Fed's policy meeting. Stay prudent, don't get into a panic, and trade sensibly. And see you tomorrow.